Hey, Friday, January 30th, 2026. Here's the rundown. Today, the market ended down a little less than 0.5%, but it did close out the month a little over 1% higher. And the reason I'm calling that out is because on Wall Street, there's a saying, as goes January, so goes the year. That in the last 75 years, that is true 75% of the time. If January is an up month, then the entire year will end in the green, positive for the year. So historically, there's a three-quarter chance that that would be the case. And the big news of the day was that the president announced his nominee for the Fed chair position, which will replace, that's Kevin Warsh. And he, if nominated, he has to be nominated by the Senate Banking Committee. And he will replace Jerome Powell and in the second half of May. And so markets today on that news uh, reacted for sure. The dollar was stronger, significantly stronger, which I think is great. And but the precious metals, gold and silver, sold off hard. Gold was down 10%, almost 10%, but silver dropped over 27% just today. Now, it has had an absolute parabolic, silver that is, lately. I mean, they've both been going up. Gold more over the last few years, couple of years, but silver lately has just gone parabolic. So I like this. This is healthy, and that it has this pullback. Yes, it is dramatic, but I do not like to see meme stocks take hold of the market, and silver definitely got memed out. And yes, it's a precious metal, and yes, it goes into is used in industry, but it needed to calm down. It needed to reset, and the market needed to just chill a little bit. So those were some big moves today. Again, the dollar was up significantly, and so what that says to me is that the market is on the news of the new Fed chair, that the market is feeling a little more calmed by the news. First of all, we know that the market likes to know the news. The unknowing is the worst part for it. Whether it's good news or bad news, the uncertainty and not knowing is the worst part. That's when the market reacts um, badly. So now we know, the market knows. It showed some confidence in the stability of that nomination by sending the dollar higher and taking the fear factor out of those precious metals. So that's my read on that. Also, it's a proxy on the notion, or not the notion, but the absolute mandate of Fed independence, that the Fed is independent from political input, and that's it. That's definitely a good thing. The Russell 2000, which are the small cap 2000 stocks, some of which are the majority of which are unprofitable. Those closed down sharply, over 1.5%. And those are stocks that do well when interest rates get cut. So the market is saying, okay, Kevin Warsh as the Fed chair, maybe the interest rate, debate gets cooled off a little bit as well. We expect fewer cuts. As I've said in the last couple of videos, I am not putting a lot of stock into the Fed and interest rate cuts this year. Whether it's one cut, whether it's two cuts, not going to matter. So I'm glad to get this out of the way and move forward along with the market and get back to the fundamentals in earnings, which we are in the middle of earnings season right now. And um, I'll talk about what's coming up next week, the significant earnings that are coming up next week. But what else do we have? We've got the U.S. government, which is going to shut down this weekend. It's going to happen. The Senate is now this afternoon voting on a bill that would fund most of the government through the rest of the year, and it would fund ICE for a couple of weeks. They're probably going to pass that, is what it looks like, but it still has to go back to the House of Representatives, who are gone for the weekend and are not back until next Monday. So at least this weekend, we're going to see a partial shutdown. So, once again, our tax dollars hard at work. And I think I'm allowed to be cynical about this government continuing to shut down on the very issue of simply keeping the lights on. So I hope you feel the same way. If you don't, that's cool too. Drop me a comment. Um, and I always like to hear all sides of the argument. That makes us all better investors. And so that is the news from there. And then this week, or I mean today rather, I want to call out the best sector of the day, which was communication services. It was led by the true telecommunications businesses. Verizon reported earnings today. That stock was up almost 12%. And AT&T reported earnings a couple of days ago, and it has had a nice climb for the next couple of days. And it was up again another over 4% today. AT&T was. And they both reported strong revenue, strong earnings, and they raised their guidance. And the reason I'm calling this out is because this is a core holding of mine for the stability part of, not as a trade, but as an investment. I like AT&T. They're both good companies. They both offer, to me, stability. If you watch the market, when the market is unstable and goes down, oftentimes these stocks do well because it is a flight to safety. Everyone has a cell phone, everyone needs Wi-Fi in their house, and these companies offer that. They've got solid businesses, obviously very sticky business. They both offer a good dividend too, both over 4% currently as a dividend. So I like it as a safety trade investment rather, and I like it as a nice barbell as a hedge against market volatility, which again brings me back to this year. I'm just keeping an eye out for that and ready for that volatility. But I like something like these, AT&T or Verizon, in my portfolio. I like that dividend, and I like that stability and that safety and that business that isn't going anywhere. So next week, let's wrap up with this. Next week, we've got earnings from Amazon and Alphabet. Alphabet is the parent company of Google, which maybe someday they'll just, rename it, and so we can get past that. But I think those are absolutely, well, I know those are going to be watched closely by the market, especially after this week's reaction to earnings from Microsoft, when Microsoft reported really strong numbers. Just had a little bit of a slight, didn't quite meet expectations on margin and cloud growth, just barely, but the stock sold off hard, 10%. And then yesterday, Apple reported amazing revenue, record revenue, and amazing growth in China, and the stock was flat. So I'm not saying that's a bad thing. I like a discerning market, again, that is being fair. And earnings, as you know, to me, things can run and be very volatile and memeish and all that kind of but at the end of the day, the earnings, everything always comes back to earnings and the business, the fundamentals of the business, the earnings, all the good stuff that we always talk about with the balance sheet, the moat to competition, the leadership, all of that good stuff. So there we go. That's it for today, Friday. That's it for the week. And that's it for the month too. So we're off to 2026, and I'll see you guys in February. I hope you have a great weekend. Thank you.